You don't always see this, but you can actually get absorption the other way before a break. So rather than, because I think most people kind of envisage absorption as being at the level, as in market trades down to a level and somebody just holds it. You can also get a market where the absorption is above the level, effectively people trying to get filled before the break. So I'll give you an example. What they're effectively trying to do, or what they're doing, is anybody who buys it off the level, they use those people as people to buy from them, and so they sell to them as we bounce off the level. And then you'll then see a sort of progression of selling below that as well. So this is one just looking to break out of this range just in here. So the range lows are around about 37. You start to see that little bit of absorption coming in there at 37. So this is someone effectively trying to pin it on the low. You get a little bit of, I wouldn't go as far as calling it momentum, and there you go again. They try and hold it. It has traded through. It's only done a little bit, and that's the important thing. When you look at what it does when it trades up, it trades one lot. It's not exactly trading a great deal. So you wouldn't be overly worried on this. That would be a touch worrying, that tick up. So this is where you then have to go, okay, where's my stop on this? But quite quickly again, it reloads. If you're looking at it for a technical stop, if you're playing the break, I'd want the stop up here at least. So probably 41. If you're playing a breakout, you're expecting this to have some distance in it. That's the next level down at 22. So having your stop there and your target down here is not exactly a bad result anyway. Like I said before, it's a case of that aids you in getting short. This is sort of saying this is the time the break's going to happen. And you see again, as it moves lower, they keep on reloading. So what they're trying to do is capture as much of the position as they can before it goes. You see they've done 260 there now. What's going to happen is this weight that's effectively being put on the market will cause it eventually to then snap. Because anybody buying now starts, it's not just people getting trapped and getting forced out, it's anybody who's thinking about buying going, well, I'm not going to sit in the way of this. I might as well just move. So what happens is as it trades down, nobody reloads. And you saw there, then that was a bit of a stop type move where possibly the person reloading got to a point where just hit the rest of it, just get the job done. You drop whenever I see that type of move, that very fast rush down, my first thought is always reduce position, because that's the panic. People aren't always going to come in and follow on and keep on selling after that. They've just seen the sort of panicky thing. The last thing you ever want to do is see someone panicking and go, I'm going to do that as well. They're panicking because something's gone wrong. Don't join that. So if you see that, use that as your exit. Well, on that, this is not a balance. That's a 1 minute chart. So probably I should have clarified that. That's a 1 minute. Where this is happening is in here. So it's there, basically. So it's a little consolidation within what is already quite clearly a downside move. So it's one where probably want to sell it. That's going to be your target at the top of this range. That gives you the indication now's the time to go. It's the hard bit with any kind of range like this. This is what you get on like a trendy day. The hard bit of any type of range like that is timing the sell, because you could very easily get caught out selling it here, and then it goes. When you get something like that, it's go on, do it now. This is right.